Hello and welcome to On the Couch with Steve, a podcast where we help you to navigate the world of buying, selling and renting real estate. I'm your host, Matt. I'm filling in for Steve, obviously. He's away at the moment. And today we're going to be talking about the latest RBA announcement. And I'm joined by Steve Beach from Stanford Financial. So, Steve.
Straight into it.
Yes. So what happened? Where are we at? What was the latest announcement?
So the latest announcement, they did announce that they're pausing interest rates again. So the cash rate does remain at 4.1%.
Woohoo!
So big sigh of relief there.
Yes.
A few good points that came out of I guess yesterday's meeting was in regards to. Inflation did actually increase for the first time in the last few months. So it went from 4.9 back up to 5.2. So there were a few people that were anticipating that we may have seen a rate rise. But I think they've made the right decision and kept it on hold because we are 4 whole points up from where we were May last year.
Yes.
So I think a lot of the damage has been done and they're still just sort of waiting to see what happens.
Yep.
Big thing that I think also made rates put on pause was the cost of oil has increased due to their stopping the as much supply, so they've reduced the workload overseas, which, as we know, it pushes up petrol prices and fuel prices. So with that comes, it's $2.20, I think, is now the average for just standard unleaded petrol. Yep. Now this, it hurts us just going and filling up our fuel, but the biggest thing with it is everything that gets transported in this country also needs fuel.
Requires fuel,
So the cost of transport is going to go up, which means the cost of purchasing any services or goods like Woolies and Coles or everyday stuff will start to go up, which ultimately will reduce the budget that we have to spend, which in turn reduces inflation. So I think it was definitely a wise decision for them to put it on hold.
Yeah, definitely. And so, what do you think it means? Obviously, they've held. We've heard many predictions here from you guys about where you thought it was going to end up towards the end of the year. Do you still think that it's going to continue on that trajectory that you originally forecast?
I think there's probably been a few adjustments made. Like I think we've been talking a lot about pause, and then we should start seeing some rate cuts early next year. I guess there's been a couple of big economic surveys that have gone out. They've asked all the senior economists of all the major banks. Yep. Pretty much all the major banks other than NAB have predicted that we will still not see any more rate rises. NAB have anticipated, if not next month, potentially December, we may see one rate rise. I'm probably not leaning that way. I still think we'll still see pauses consistently now for the next few months. But it'll be interesting to see how, I guess, this is the oil prices and stuff like that and how that's going to affect the economy as we go. Yeah. So particularly where it always gets a little bit scary over Christmas time because everyone takes holidays. It's ultimately Christmas. Everyone spends a lot of money. Then there's New Year's, school holidays. There is a fairly large expenditure. And that's a big reason why the RBA don't meet in January because there isn't too much inflation for the month of December.
Enough, yes.
So they sort of kind of average out the quarter and then they meet in February to make a bit more of an informed decision from there.
Okay, perfect. And I guess then leading on to that, so obviously we've seen rates hold now 4 months in a row. Are we seeing that hurting when it comes to people actually applying for mortgages? Are we seeing that slow? Are we seeing that increase? Is it staying steady? What's kind of happening in that space?
A big thing for us, we're seeing probably more applications coming in at the moment, not only for refinancing, so people with existing mortgages trying to get a better deal or just reduce those repayments once they've come off these, the low rates that people sort of locked in through. Because there's still 550,000 mortgages under 2% that by the end of the year will have fallen off.
Yeah, right.
So there's still a lot of people probably not feeling the pinch so much as these high rates are impacting. But the biggest thing that we are seeing is, and Steve was here, would probably contest to it as well, is pre-approvals. So real estate agents, when they're getting offers on houses, one of the first questions they're going to ask you, have you spoken to a bank? Have you spoken to your broker? Are you pre-approved? Are you paying cash? Because these are very big decision makers for the seller of the house. It's, hey, you can get one price with no pre-approval, or it might be $5,000 cheaper, but they're pre-approved on the bank, so you know that they're actually going to go ahead and actually purchase the house. And for me, selling, I'd probably take the person with a pre-approval, knowing that, okay, it's actually going to be a done deal, as where you might go 21 days for somebody that hasn't spoken to a bank or a broker yet, and they're asking for finance extensions and they don't get approved. It's now been a month and a half of not being able to sell a house, and whether the market's still going up or going back down. Can be a bit of a concern. So which we did see statistics about. Housing prices, they did go up 0.8% last month, so there's definitely not a slowing down of the housing market. Which again, in turn, we talk about, like I said, there's 550,000 people that are going to come off these low rates. Everyone keeps still talking about this market crash, which no one's ever seen yet.
No.
I think there will be the spot bargains that are going to come out, but because of the supply and demand side of things, so there's so many people wanting to buy a house or get into the market or even change homes, but there's not that many people selling, so which is why the real estate market continues to go up.
Yeah, and I think talking to some of the team from NGU, myself, they can attest to the same thing. They still saw strong numbers last month. They had great sales. So the market's definitely not slowing down despite some of the rumours that are out there. So I guess we'll start to wrap up. But the last question that I have for you is related to, so if you've had bad credit in the past or financing in that space, obviously with the higher rates at the moment, how's that working? Are they still struggling to get finance? Is there still ways for those types of people to potentially get into a home, get finance?
So I guess as being a broker, we have access to over 50 lenders. So we often talk about what we call prime banks and then subprime banks. So we've done many loans with people with unpaid defaults, court judgments, ex-bankrupts, getting them home loans, day in, day out sort of thing. Yep. The biggest thing about getting into the marketplace is often just making that phone call to a broker to go through that financial position and actually just have a chat, and we can kind of steer in the right direction, indicate to you how much, I guess, deposit that you need or what income that you can actually afford for.
Yes.
Ultimately, by having sort of some issues on your finance, you're probably going to pay a slightly higher interest rate. And although mortgages are generally over 30 years, doesn't mean you have to stay with that bank for 30 years. So could just be a stepping stone of, we get you into the house, you pay sort of a higher premium to do it, and then in 12 months, 18 months or 2 years, we refinance you back to a prime bank, and ultimately reduces your repayments, and you can sort of save a lot of money. But biggest thing is your foot's in the door, you're actually in the marketplace.
Yeah. I guess if you are in that kind of position, reaching out to someone like yourselves, like Stanford Financial, is probably the best way to go. Shameless plug, but still. All right, perfect. So thank you for tuning in to hear and see more of On the Couch with Steve. Make sure you subscribe below. Special thanks to our guest Steve for coming in and filling in, I guess, while Steve's been away as well. And if you have an opinion about the topic that we've spoken about today, feel free to comment below on the socials, and stay tuned for more. Steve will be back.